Good morning, Sarah. It's good to be here.
So, Claire, as I mentioned, revenue looked good and earnings on track. It was operating income. Looks like it got impacted by fuel prices. How big of an issue is that?
Well, let me start with the quarter was good for us. We grew the top line on a reported basis of about 7%. EPS grew 8%. We did see some margin pressure on operating income growth. We guided 4 to 6%. We came in a little bit above the midpoint of that. And we had about 250 basis points of pressure related to fuel. Since we gave the guidance 90 days ago, all the events that have led to the higher fuel prices have occurred. And so we had to navigate that in the quarter. But I think very importantly, Sarah, our guidance for 2Q is 7 to 10% operating income growth. And we reaffirmed our guidance for the year. So that's indicating that we think we have the ability to navigate this environment of higher fuel prices pretty well.
What about the consumer? Does the consumer have the ability to navigate the higher fuel prices? You capture all income spectrums, including the low income, which has felt the most pain. So what are you seeing there?
Increasingly, it depends upon what consumer you're talking about. We see that among our customer base, the high-income customer continues to spend with confidence in many categories, whereas the lower-income consumer is a little more budget-conscious, even navigating some financial distress. Since we gave the guidance 90 days ago, as I mentioned, we've seen fuel prices increase, and so it stands to reason that incrementally from 90 days ago, there's a little more pressure on the consumer. This narrative around the K-shaped economy, we see that in our business as well. One of the things that we monitor is the year-over-year change in spending between high-income, median income, and low-income consumers. That gap has continued to widen as we've gone through the last couple quarters between the high-income and the low-income. And I'll give you one data point here. When we look at our business, obviously we sell a lot of fuel in the United States. The average gallons that a consumer is filling up with has fallen below 10 gallons. It's the first time that's happened since 2022. So it does show that there's a little bit of pressure on the consumer right now.
John David, a lot of work's being done on SNAP. People who were enrolled in states like Georgia and Arizona and Florida. I mean, hundreds of thousands of people falling off the rolls of food assistance. Is that weighing on results too?
It did weigh on results early in the quarter. As we entered the quarter, we actually saw quite a bit of an impact on that. It slowed as we went through the quarter. Now, one might ask, is that a result of people sort of calibrating to this new norm, or is it tax refunds coming through? Maybe some of both. As we exited the quarter, we felt a lot better about the impact of this, and I think we'll be able to navigate this fine as we go through the year.
Yeah, on that same note, I mean, general merchandise, I think the mix there was a tailwind to your gross margins for the first time in a long time, maybe as much as 18 quarters or something like that. But again, to this point of tax refunds, so how durable is that given what you saw from tax refunds, or whether that was really the reason for that change?
Yeah, I think it's both. If you look at the impact of tax refunds, certainly people are spending that on items like fashion, merchandise, things of that. I think that did have some tailwind. I don't want to minimize the impact of that. But at the same time, we're making changes to our business that I think are having a pronounced impact and helping us to sell through more general merchandise. Our assortment is much broader than it's ever been before. And in a category like fashion, that has a derivative benefit to other style-inspired categories like beauty and home decor. All of these had some of their largest share gains in 5 years. I think as we go into the second quarter, we've got metered expectations around this. We certainly don't expect the same benefit from tax refunds, so probably the benefit to gross profit won't be as pronounced in the second quarter as it was in the first. But again, we're taking steps on our part and our initiatives to try to make progress here.